Have you ever looked at your bank account and wondered where all your money goes? You work hard, you earn a decent salary, but somehow, it never feels like enough. You're not alone in feeling this way. The truth is, there's an invisible force constantly working against your wealth, and most people don't even realize it's happening. Today, we're going to pull back the curtain on this silent thief. Let's start with a fundamental question. What is money, really? We use it every day, but few of us stop to think about its true nature. Money isn't just the paper in your wallet or the numbers on your screen. At its core, money is a measuring tool. It's a way for society to assign value to goods and services, making trade possible and efficient. Think of it like a ruler for economic value. But here's the crucial part we often forget. The piece of paper itself has no intrinsic value. Its entire worth comes from what it can be exchanged for. This leads us to a critical concept. Inflation. In simple terms, inflation is what happens when there's more money in the system, but the amount of goods and services available stays the same. Imagine a small island where there are only 10 coconuts and $100 in total. Each coconut would cost $10. Now, if someone suddenly drops another $100 onto the island, but there are still only 10 coconuts, the price of each coconut will naturally rise to $20. The value of each dollar has been cut in half. This is inflation in a nutshell. In the real world, central banks control the money supply, and when they print more money, the value of each unit of currency you hold decreases. You might be thinking, inflation is slow, it's not a big deal. But that's a dangerous misconception. Let's put it in perspective. If you have $10,000 sitting in a savings account today, and the average inflation rate is 7%, in 10 years, that $10,000 will only have the purchasing power of about $4.800 today. Your money quietly lost more than half its value, without you spending a dime. This is the silent erosion of your wealth. Now, here's the part that widens the wealth gap. Inflation doesn't affect everyone equally. Those with significant assets like real estate, stocks, or businesses see the value of those assets rise with inflation. Their wealth is protected and even grows. Furthermore, they understand a powerful secret. In an inflationary world, responsible debt can be a tool. If you can borrow money at an interest rate lower than the rate of inflation, you're essentially being paid to borrow. The future dollars you use to repay the loan are worth less than the dollars you borrowed. Meanwhile, what does the average person do? We tend to fear debt and keep our life savings in safe places like low-yield savings accounts. But with inflation consistently outpacing the interest these accounts offer, this safety is an illusion. It's like trying to fill a bucket that has a large hole in the bottom. You're constantly pouring money in, but it's constantly leaking out. The wealthy fill buckets without holes, and the water level rises on its own. So, what can you do about it? The first step is a shift in mindset. Stop thinking of money as something you just earn and spend. Start thinking of it as a tool that must be put to work. You need to move from being a passive saver to an active investor. This doesn't mean gambling on risky stocks. It means building a solid financial foundation. A practical approach is to divide your money into 3 parts. First, an emergency fund for short-term needs, kept in a readily accessible account. Second, funds for medium-term goals, invested in stable assets that can at least keep pace with inflation. And third, money for long-term growth. This is the portion you invest with the goal of achieving returns that significantly outpace inflation. For most people, a consistently effective way to do this over the long term is through low-cost index funds. By regularly investing in a diverse basket of the entire market, you harness the overall growth of the economy, which historically outperforms inflation. The game of wealth isn't necessarily about working harder. It's about understanding the rules. Financial education isn't taught in most schools, but it's one of the most important subjects you'll ever learn. It empowers you to see the economic landscape clearly, make informed decisions, and finally stop the silent leak in your financial bucket. It's about building a future where your money works as hard for you as you worked for it.